Will a weak jobs market impact the dollar? Hi, it's Charlie giving you today's video. So, over this past couple of weeks, we've seen some interesting developments, and fundamentally, so we kicked off just a couple of weeks or a week and a half ago. Well, this is the dollar index, by the way. Here, this big red down day here was the FOMC day. So Powell was speaking, and Powell had a more dovish tone to his language. He didn't want to entertain a conversation on hiking interest rates, and so was happy to talk about interest rates remaining elevated. But he did give a nod towards the jobs market, and that they would need to see, a weakening jobs market in order to help them justify a rate cut. And then 2 days later, on this day here, we had non-farm payrolls, which came out as quite a big miss, so a bit of a surprise on the downside. So the number of jobs created was much fewer than was anticipated, and we saw a fall on that day. Now, admittedly, as we can see, we saw quite a big fall, but then the markets did come back up quite a bit, or the currencies came back up quite a bit. Why was that? Was because of the inflationary element within that report. There was still inflationary elements within the wages data. So we came back up. Sorry, it was on the PMIs after that. Sorry, it wasn't within that. It was in the PMI data later on, which had inflationary data within it. So, and then here we are coming into this week, just gone. And the jobs numbers that came out this Thursday, so the weekly unemployment claims, they rose quite a bit higher than was forecast. So again, the dollar sold off. So this is where we're at the moment. So it brings us back to the question, will a weak jobs market impact the dollar? And as we can already see, the dollar does move around a bit on jobs data, on as far as the labour market is concerned. So the other major impact is obviously inflationary data. So at this stage, if we were to continue seeing a weakening labour market, we've just seen that first print just a week ago, then the anticipation would be that the dollar should weaken on that. Why? Because market participants would start to price in a Fed rate cut coming if there's a weakening labour market starting to grow. So, and all of a sudden, the dollar starts to sell off as anticipation builds that the Fed will cut rates at some point. I'm just speculating here at the moment. So that would be generally what would happen on a weakening jobs market. If the jobs market picks up, then the opposite will happen. But technically at the moment, when we look at the dollar, if I zoom out as far as the dollar is concerned, technically at the moment, just on the daily chart, this is, the dollar made a low here. Excuse my voice, I've got hay fever at the moment, and so I'm sure it's affecting many of you as well. Made a low, made a confirmed higher low once price went higher here as well. So it's actually, and it's come back down into testing this zone as well, just last week. So technically at the moment, the dollar is still within this upwards trend since the beginning of the year here. And so, but it's something to look out for. If, like I've just said, if we carried on seeing some weaker jobs numbers, then we could see, the dollar start to break that trend. Now, the caveat to that is that we have inflation, and just coming up next week, we've got CPI, the big one, the consumer price inflation. So that's coming up next Wednesday, and so we're in this situation where Powell even was asked about stagflation, and if you remember, he said, "Well, I don't see any stag and I see no inflation," in answer to that. But it could become a topic further down the line, because let's say in next week's CPI that the inflation numbers remain elevated, or they come in higher than is expected. Then we could have a situation where we've got a lowering, jobs reports. Let's say we've only had one so far, plus we've had those weekly unemployment claims. But if we get to next month's non-farm payrolls, and that starts to become a bit of a trend of weaker jobs growth, and there's plenty of reasons why that could be the case. But stubbornly elevated inflation, then we do have that potential weakening within the economy. We've already had PMI readings coming in lower than forecast in the US, so a slight weakening in the US economy, but with stubborn inflation. So what would that do for the dollar? Well, you've got one side of the equation, like I've just said today, talking about if we were to see more continued weakening in the job sector, that would normally result in a weaker dollar. But then you've got the inflation data, which could, if the inflation data remained high, could help the dollar rally or rise in a normal situation. So because the Fed's mandate is to try and get inflation down, so interest rates remaining higher for longer, or dare we say even rate hike further down the line. So what does that mean for the dollar then? If we've got both of those situations going on, probably more, unfortunately, sideways ranging price action. So what's overall been going on with the dollar over this past year since 2023? The prior downtrend coming all the way down into the beginning of 2023, it's been in a pretty tight range since then. So you can see the range that it's been in. So now, what I find interesting with the dollar is that markets don't stay range bound forever, and they do end up breaking out. So it is interesting to see what's going to happen here for the dollar. So we've got a lot of push and pull factors at the moment with regards to various data points that are coming out of the US. Some data points are making the dollar weaker, in the days following those, and then the dollar bounces back on other data points such as inflation or inflationary pressures. So the potential is for more overall up and down price action. But if we saw CPI next week come down, then, or I can't imagine it really be coming down. All the other inflation prints are not suggesting that it should be. But even if it came in line with forecasts, the forecasts are for it to come down marginally, then that might be enough in conjunction with those jobs numbers that we've had just over this past week to bring the dollar down. Otherwise, if CPI comes in stronger, then just as easy, then the dollar will go higher. So it's a fairly straightforward scenario at the moment. But nevertheless, even if CPI comes out stronger and the dollar shoots higher, if the next jobs numbers, we've got retail sales at the same time, they could come in a bit depressed. So we could see any upside in the dollar could end up just fizzling out. And this is the problem that we have at the moment, is this sort of stop-start market in relation to the dollar. So, but things are building. We're starting to see some interesting numbers coming out of the US. So next Wednesday will be a very, very important day. Do keep an eye out on the dollar for next Wednesday, because it's really quite close in relative terms to being back up at these highs from just a couple of weeks or so ago, or just as easily starting to break this trend on the daily chart that's been in since the beginning of the year. And if it was to then start to break through this zone down here, then that raises a lot of question marks as far as if it wants to come lower below that. So going into next week is going to be very interesting. Have a lovely weekend. I'll see you next week.